Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our weekly stock market analysis for January the 12th, 2020. All major indices closed near all-time highs this past week, despite ongoing conflict back and forth between the U.S. and Iran. However, that de-escalation between the U.S. and Iran added to the bulls stepping in rather aggressively to push us to all-time highs, with all major indices up on the week, and the S&P primarily leading the pack, with the majors up just 1.63%. However, the tech-heavy Nasdaq continued to push very aggressively at 2.8% just over this week, with a huge range of 7.63 points, which is rather significant. We'll dive into that in just a little bit. The Russell additionally moved higher, however, just that much shorter in their overall range at just 2.91 points. And we'll see that potentially could lead to some type of pullback within the Russell. The Dow made all-time highs, crossing above 29,000, but did close the week on Friday just that much down as individuals took profit targets. As always, we'll jump right in with our S&P 500, and we'll take a look at our weekly chart, and we will do some predictions as we see moving forward throughout this upcoming week, for the potential small pullback, as we have begun to hit a longer term trend line, and we're looking for a potential pullback, as we did close just right at that trend line, for a potential opportunity for some shorter term pullbacks. However, we are still very, I'll even throw a third very in there, bullish for where we are going over the next few weeks. But we do have a very consistent drive up from the bulls over the last 10 to 12 weeks, which lends us to the probability that there is some type of profit targeting as we get closer to the end of January and we butt right up into earnings season that kicks off pretty aggressively starting on Tuesday, with some of your larger banks and institutions reporting out. But at the same time, we're coming into our January options expiration. And traditionally, what we did say just that much last year, we did see an opportunity for some of the bears to step in and look for some type of retracement. So as we look toward this week, we will watch heavily to identify some opportunities for us to pull back. But as you can see, we are still very aggressive. And if we kind of look at this longer term channel, there is potentially an opportunity, if the bears do have an opportunity to take control, we do see some type of opportunity for us to pull back to our moving averages. First target would be our 9-period moving average, is coming in roughly about 317.88, and then more consistently, roughly about that 310 mark, our 20-period moving average is that secondary target. Now, obviously, that is a very significant range. We don't necessarily believe that that will take place with this week, with not a huge amount of economic indicators to try to drive that, but there is that opportunity for us to kind of come back in, and that does, at the 310 mark, that does align to a lower volume node and some type of broader target from a volume perspective. So we'll watch that, but the S&P is still very bullish, with a huge range this past week of just greater than 7 points, which is pretty awesome. So we'll jump over to the Nasdaq. Again, the Nasdaq, very similar to the S&P, has been, quite frankly, on a very bullish tear over the last 12 weeks or so. Feel like a broken record every week. We're reporting that we are seeing all-time highs, and we continue to see this upward momentum. But at the same time, toward the latter part of the week on Friday, we did see a little bit of profit taking in the Nasdaq, and the Nasdaq is being heavily pushed upward by Apple, who saw significant gains this past week, and we also will look to see if that can continue as well. But we are still have an opportunity to look a little bit deeper. We'll dive into the daily. You can kind of see we did see a little bit of a pullback on Friday, and however, we did not close below the low of Thursday. So it still is an indication that the bullish trend is still there. Now, there is potentially an opportunity for some type of retracement back down to your 9-period moving average, which is this light green line here. But we don't want to bet the full boat, because the market is still consistently bullish. Now, if the earnings of our larger institutions, that could be some type of a catalyst for a pullback, but we'll continue to watch that as some additional opportunities present themselves. But we are still predicting some type of either bullish skew or some type of sideways movement throughout the week. Now, at the same time, we do want to be flexible and trade the market as it unfolds, but we do need to kind of come in with some type of plan and hypothesis. So we anticipate some type of sideways to up movement as we continue out the rest of the week. So some type of sideways or a slight push upward, and we'll continue to watch that. We'll move on to the Russell. The Russell very consistently has a very strong bullish pullback, very strong bullish movement with a slight pullback over the last 2 weeks. However, we did see the bull step in very consistently with the other major indices and did pull back down as we did kind of come into this pretty strong channel and closing above back in range, which is an indication on the weekly chart that the bulls are still in control. However, we do want to zoom in just a little bit on the daily. We don't typically come into the daily, but it does kind of showcase a little bit more of what we are seeing. So there is some type of divergence from a perspective. So from a shorter term perspective, it is seen as some type of bearish movement as we did close below the open and we did test below the previous 2 to 3 days within that range. And we are divergent from our weekly chart, which did close positively, but we are seeing some type of opportunity for potential pullback over the last couple of days. Now, at the same time, within our broader channel, we did see that we closed back inside the range and a pretty significant showing of the bulls stepping in to pull us back to higher prices. Now, we do anticipate some type of sideways movement as well moving forward within this week, but at the same time, we do see this as a potential reversal back toward the top end of the range. So there is an opportunity given that we might pull back up to roughly about 50% of this overall range, coming in at roughly about 168, which would test our yearly highs from this past year. So there's an opportunity there as well. Now, as the market continues to move aggressively, we do want to look at some type of opportunities for us to take advantage. Now, we still have been very bullish on all your major indices, and this few weeks of the front side of January has been very profitable for us. And we do want to leave you just with a little bit of a trade idea as a particular opportunity. We'll take a look at Under Armour. So as you can see in the daily chart here, we have seen some pretty consistent oscillation over over the last week or so as a potential opportunity for us to step in and take a bullish opportunity. So we've seen a pretty consistent pullback, but this does line into a high volume node. But actually, if you do a Fibonacci, it does line in very consistently as a 38.2 retracement, which is a typical opportunity that we can have a high probability opportunity for us to step forward and look to kind of pull back towards upper end of the range. So we do want to leave you this here. Now, if we do breach that, we do see that there is an opportunity coming in at value area low for some type of bullish retracement as well. And that does in actuality line up with a 61.8% retracement. So there is an opportunity for a long over the next week or so on Under Armour. And we do have an alert set above the high of Friday for a long entry. So we could take a look at this longer term trend and we can see a pretty consistent pullback, but also still within range of value. If you take a look at our value area high and our value area low, we are roughly approximately within 50% in that range, which is an opportunity for some type of traders to enter trades and those shorts looking to exit trades. Also, coincidentally, it does line into our 9-period moving average. So multiple vectors kind of converging. So we do look at this as a higher probability trade going into this week, and we will take and give an update on the success or failure of such coming into our next week's video. So as always, we want you to take a look at our Facebook page. Please don't hesitate to reach out and subscribe and like. The links are at the bottom of the page. And as always, it's your money and it should be under your control. Take care.